4 major indices, 4 different symbols, one identical warning sign underneath all of them. Right now the price hasn't caught up yet. Nasdaq 100, S&P 500, Russell 2000 and the Dow are all still trading well above the institutional cost basis. They are extended, technically bullish, still trending. And every single one of them just had the same thing happen underneath the hood. The flow model just flipped to full risk off. That's not a coincidence across 4 unrelated instruments. That's a regime shift. I'm going to show you exactly what the data says instrument by instruments. And by the end of this video, you will have the specific price zones I'm watching on all 4 heading into next week. Before the charts, 3 concepts. If you already know AVAP and the regime scoring, just move on from this and get into the analysis later. Just skip ahead. First, the AVAP deviation. Every index here is measured against an anchored volume-weighted average price. It's not a moving average. It's an AVAP. It's the actual average price paid, weighting by the average dollar of volume since a specific structural point. That's the institutional cost basis. In this instance, is the low of the April. So when price is 5%, 6%, or 9% above that line, that shows the market is strong. That's price has moved a long way from where the last wave of buyers actually paid. The further price stretches from this purple line, the more fragile the trend gets, because everyone who's underwater on a pullback is above that AVAP, not below it. And that line is also where I get every target zone I'm about to give you. When a market this extended loses its flow support, the AVAP is the level it owes a visit to, which we saw in late March. And second, the cancel and flow model, 3 proxies. We have TLT for liquidity, SPY for the equity trend, and BTC as the risk on parameter. Each one gets a pass or fail. When all 3 fail, 3 red X's. That's full risk off. It's the macro backdrop the index is trading inside of, completely separate from what the price chart looks like. Third, the deviation filter is the mechanical gate. Every signal tier in this system requires price to be within a defined deviation band of the AVAP to qualify. When price is too extended, the filter reads fail. No new long signal can fire here, no matter how strong momentum looks. That's a system refusing to chase. Keep those 3 in your head. Now let's apply them and build the levels. Let's start with Nasdaq 100. The daily time frame bias is bullish. Price is 5.37 above the AVAP. That's a real trend. This thing has been coiling and expanding for months, but the deviation filter already reads fail because just the band is 2 to 3%. So price is almost double where a fresh signal would even qualify. Underneath that, we have the cancel and flow. It's full risk off. All 3 proxies are red. The composite score label, it says exactly what you expect, is deteriorating. Now drop to the 4-hour. Bias has already flipped bearish. Deviation is minus 2.8%. Also outside the tighter 1.5 band this time frame uses. So the filter failing on the way down too. Today's candle down 130 points, 0.45%. Here's what that gives us for the next week. Nasdaq's trading now at 28,566. Its daily AVAP, the institutional cost basis, and the target zone, if the risk of flow keeps pressing, sits around 27,100. That's the level this index owes a visit to if the trend cannot hold. The nearer term level is the 4-hour. That is sitting around 29,390. But that's now overhead. So is if Nasdaq 100 reclaims 29,390 on above average volume, the near-term bearish signal is invalidated and we are back to watching the daily extensions alone. Until then, 29,390 caps it and 27,100 is the target underneath. Russell 2000 is the most extreme version of this. The daily deviation is 8%. So the widest gap from AVAP of any index on this video together with the Dow. The filter is failing by a wide margin. Suggested band is on the daily 3% and we are now at 8. So same cancel and flow reading underneath. We have full risk off. The composite is -1 out of 9 and we have the transition is deteriorating. But look at the 4-hour deviation filters status specifically. It says open. It says not, it doesn't say fail. The deviation is only -1.87. It's inside the 1.5% band on the 4-hour. So that means the next signal on this time frame actually qualifies mechanically. The small cap index is the one closest to a fresh, valid signal firing in either direction. The Russell's at 2,958 and the target zone is down at roughly 2,738 on the daily. So that's the widest target distance of any instrument in this video, which makes sense given it's carrying the widest extension. But if we go to the 4-hour, the AVAP sits just overhead, only about 0.9% away. So that's the closest confirmation level on the board. A 4-hour below that range with the filter open would be the first domino. So what's this one first? It's got the least distance to travel before it tells you anything. S&P 500, the bias is bullish. We have a deviation of plus 6.36%. So that means that the filter is failing again. We have the cancel and flow is full risk off. And we have the same composite minus as in all the others. So one thing worth calling out specifically here is the bond equity correlation. It reads stress recovery at 0.38. That's above the 0.35 threshold this framework uses. So when the correlation runs hot, bonds and stocks are moving together, which strips out the diversification benefits that's supposed to exist between them. So that's part of why the flow model refuses to give this an accumulation read, even though liquidity conditions might otherwise look constructive. On the 4-hour, the bias is bearish. Deviation is only negative 0.75%. So the filter status is open. Same setup as the Russell. So the daily AVAP, the target zone, it sits around 7,015. That's roughly 6% pullback from here, which lines up with the correlation warning. So this is the instrument most exposed if bonds and stocks keep moving together on the way down. The nearer 4-hour AVAP is around 7,518, and it's also just overhead. Same rule as the Nasdaq. Reclaim that on volume, and the near-term bearish read is off the table. Fail to reclaim it, and we will see the 7,015 that we just looked at the daily. Now, Dow Jones is an outlier, and it's worth spending some time on exactly why it's an outlier. We have on the daily, the VWAP deviation is 9.3%. It's the single most extended reading across all 4 indices today, and which means that the filter is failing hard. But the confluence score here is actually negative, -1, with only a factor active. Compare that to Nasdaq 100 or Russell, which had positive confluence scores even while extended. The Dow's extension isn't being confirmed by supporting factors underneath it. So it's stretched on price alone. And the 4-hour is the one time frame across all 8 charts that's still bullish. Well, barely bullish, 1%. And which means that the filter is open. The win rate on that 4-hour signal history is a coin flip of 50%. on a very small sample too, so I wouldn't lean on that number either way. The levels here works differently because the Dow hasn't flipped yet. It's the daily AVAP, the deep target zone of if the whole complex breaks. It sits around 47,690, and that's the furthest away of any instrument. That's about 8.5% down from here. The number that actually matters is the 4-hour, is on the 4-hour chart. It sits around 51,660. So right now the Dow is trading above it. That's why this time frame is still bullish. A 4-hour close below that is the specific print that would flip the Dow bearish and make it 4 for 4 across every time frame I track. So that's the single level in this entire video I'd put a watch alert on, which means if we do get down to the AVAP level, that will still be a possible long, depending on what the underlying is telling us. But I'll get back to you if that happens. So here's the part that matters more than any single chart. 4 different instruments, 4 different volatility profiles, 4 different extension levels from 5.37 up to 9.3. And every single one shares the exact same macro reading underneath, which is full risk off, liquidity is failing, equity trend failing, risk on parameter failing, composite around -1 out of 9 on all of them, and the transition is deteriorating also on all of them. So that's not 4 coincidences. This is one regime expressing itself identically across every major beta exposure in the US market at once. What makes this a genuinely useful signal and not just fear-mongering is where it's showing up. It's not showing up in the price yet. On the daily charts, price is still up, still extended, still technically bullish on every single one of these instruments. The divergence is entirely underneath the surface on the flow model, in the deteriorating composite, in the 4-hour charts that have already started rolling over on 3 of the 4 names. This is exactly the scenario that the deviation filter exists for. When price is this far from AVAP, the system won't let a fresh long qualify. Not because the trend is necessarily over, but because chasing an extended move into a deteriorating flow regime is the worst risk reward than waiting for price to come back to the AVAP and prove it can hold there. So let me walk you through how to actually use this table, because the levels alone don't mean anything without the sequence. Every instrument has 2 numbers. The nearer one is 4-hour AVAP. That's your confirmation or invalidation level for the next few sessions. On Nas 100 and S&P, price is already below it, so a reclaim on volume is what would make the near-term bearish signal off the table. On the Dow, price is still above it, so a break below is what confirms the flip. Russell sits right on top of its own version of that line, closest of the 4, which is why I'd watch it first. So the farther number is the daily AVAP, the actual target zone. This is where the deeper move goes if the near-term level breaks and the full risk off reading in the flow model keeps pressing. Nobody should expect all 4 to get there in 1 week, but if you see 2 or 3 of the near-term levels break in the same session, that should signal this isn't 4 isolated pullbacks. It's the regime resolving in the direction it's already telling you underneath the surface. So if I had to rank these for the next week, Russell first, because its confirmation level is closest, under 1% away. Then the Dow, because it's the one instrument that hasn't flipped yet. And 51,660 is a clean single number to watch. The Nasdaq and the S&P are already flipped on the 4-hour. So for those 2, The question is whether they reclaim, not whether they break. None of this means sell everything. It means the extended, easy part of this move has already happened. And the flow data underneath, it's telling you to be selective about new risk from here. Not to fight the tape, but to know exactly which levels turn still bullish underneath a warning sign into the warning sign just became the price action. So if you want the full breakdown of how of these regime states get scored, full risk on, accumulation, distribution, all 9 states, I release a daily brief on Substack every day. The link is in the description. And I run this exact framework every trading day at cantillonresearch.com. You can have the full instrument breakdown, entry levels, invalidations, the whole board, updated every session. If today's read was useful to you, the daily brief tracks these exact levels in real time. So subscribe if you want to see how this resolves. And I'll be back as soon as one of the level breaks. So trade safe, take care, and bye-bye.